talking about confidence, it seems to have returned to the Nigerian banking space, where we've had banks in Nigeria generally seeing a strong couple of days this week, largely as a result of the positive developments in the AMCON bill, with all banks now having agreed to a levy of 0.3% on total assets from 2011 to 2020 for a sinking fund for AMCON specifically, while the CBN will put in 50 billion naira annually. So lots of positive news coming to the fore there, and certainly the series of good results we've seen filter through, adding to seeing this shift in sentiment. We've got Nigeria's Diamond Bank amongst those to have released numbers so far, and Executive Director of Corporate Banking at Diamond Bank, Uzoma Dozie, joins us now. Uzoma, thanks so much for joining us this afternoon. Well, we've seen the bank report a 6.2 billion naira pre-tax profit in the first half of this year, rebounding from a loss of 7.9 billion last year. And similar to the other banks where we've seen this improved bottom line but a weak top line, this is the case here. Analysts, though, are questioning that Diamond Bank's gross earnings suffered a double hit on both interest and non-interest income lines. So let's take a look at what's contributed to these losses here.
Hi, Alicia. Good afternoon. Yes, we saw a drop in our risk assets, and also the declining interest rates were contributed to the losses, to the reduced earnings. However, we were successful in defending our interest margins, and as the figure shows, our low-cost deposits came down considerably. So, although our top line was down, our operating income went up.
Let's get deeper into the detail of these numbers here. I mean, net loans falling back 12% during the period. What's your strategy in this regard moving forward? Because pressure is being further exerted by the fact that we are seeing lower lending rates. So you're going to have to build up somewhere along the line.
Certainly, that's a good question. For Diamond Bank, our strategy is, first of all, we were beginning to see a rebound in the middle market, where we are very strong and dominant, and so we expect to where our loan processing is beginning to increase in that area. Another interesting area is the telecoms. With the new cable that has just landed in Nigeria, we expect to see a new wave of opportunities coming out of there, and businesses are certainly going to need some financing there, and which we will be able to accommodate. And we've seen a lot of traction in construction industry. If you look at our off-balance sheet line, that increased, and that's a reflection of the bonds and guarantees that are coming out of that. And we see the middle market construction companies, and also the corporate ones, increasing their order books as well. And we mustn't forget that central bank is also trying to create an enabling environment to lend to different sectors.
Yeah.
So they have their 300 billion naira guarantee, which they are willing to share risk with banks, and also the Bank of Industry loans as well. So there are a lot of with the private sector and also with the regulators, we're trying to create that incentive to lend to the real sector. And I think that will push into the third and fourth quarter of this year. We've
seen for now that, it's while you wait for that to gain traction and, contribute to your earnings moving forward, there's been a decline in interest expenses, and that has cushioned your interest income to an extent. What's the plan moving forward, though, in terms of increasing your deposit base, or are you waiting for that lending arm to fully recover first so that your interest margin is as effectively managed as you grow?
Well, I think our interest margin has been declining from the strategy that we put in place, especially our retail strategy, where we've seen a reduction, where we saw a reduction from 6.4 to 4.5 in this quarter. And that is on account of the accounts we're opening. We're doing about 20,000 accounts per month. 4,000 of that is from the small businesses who are actually now depositing current account deposits, and of course, the savings, which contributes about 75%. So we will continue along those strategies. It's a strategy that's working. It's helping us cushion reduce our interest expense, and it's also helping us to protect our margin. So that strategy is going to continue while we push to grow the loan book in a constructive manner.
Looking behind the headline numbers, though, it seems like Diamond Bank is still taking quite a knock in terms of provisions being made. So you've booked 5.53 billion naira of additional impairment charges in 2010 so far. This despite lending less. So what direction do you see this taking as we move forward? Because certainly your recovery process seems to be slow on that front.
Well, in the last interview that we had, one of our objectives was to increase our coverage ratio to the 90s, and which we're trying to do. We're currently at 86%. There are also a few initiatives coming out from the regulators. There's a new prudential guideline. There's the AMCON, and also there's the Bank of Industry refinancing some troubled loans. And so we won't be able to give you a clearer picture until the beginning of the fourth quarter, where we'll know exactly where we are there. But certainly with those three initiatives, we see a much improved NPL.
Well, the positive development has been all about AMCON coming to the fore over the past couple of weeks, giving the sector as a whole much needed confidence. What do you see the spelling for your lending capacity moving forward and your growth in your lending arm, where you have been conservative over the period?
Well, it will only, I guess, well, what the AMCON does is increases liquidity for banks, and also gives us more room to do lending. And so just like I said earlier, these are very positive initiatives that will help us lend to the real sector. And of course, with our new risk management framework, we believe we can lend aggressively, but safe as well.
We've seen the banks commit to a 0.3% payment of total assets on a yearly basis. What impact do you see that having on your profitability moving forward? Because if you look at the numbers here, it would mean 38% of your half-year profit figure going down that route so far.
Well, Alicia, I think the details of the framework is not quite clear, but what I have to say here is that it is our industry, and so we have to invest in it to ensure it is solid. And so whatever we have to do, it's a price that we have to pay to ensure that this industry is viable in the future.
Yep, but certainly the trader I was speaking to this morning saying that this is a collective initiative, and it's more a question of what banks cannot afford or can afford not to do at this stage of the game. We're going to have to leave it there for today. Thanks so much, Uzoma Dozie, for joining us. Of course,